Our vision is so that humans can interact with all devices using human language. Such powerful words from the CEO, Robin Li. It only makes sense that the same company follows his motive. So called the Google of China, Baidu is shaping up to turn Robin Li's words into reality. My name is Chinmay, and I'm a freshman at Centennial High School giving Baidu a buy rating. Here is my analysis. Leadership and history. For Baidu's leadership, they have a board of directors and management. A common name between each subcategory is Robin Li. He's the co-founder, chairman, and CEO. A brief history about Baidu. They were founded by Robin Li and Eric Zhu in 2000. In 2004, they became profitable and Eric Zhu left the company. In 2006, they became the fourth most trafficked website in the world. And then after the pandemic in 2020, they started introducing more AI technology, which really boosted their dominance in the Chinese market. For my stock summary, I chose Baidu to have an upside potential of 33% and a target price of $200. Starting this competition, Baidu is trading at 150.3. That is a snapshot chart. The financial ratios are from Morningstar. The stock profile, it's obviously traded in China. The stock exchange itself is on NASDAQ. The industry's internet services and the 5-year percent return chart, it clearly underperformed the Dow Jones, the S&P 500, and the NASDAQ. Baidu is divided into two subcategories. One is Baidu Core, and the other is their entertainment service provider, IQIYI. They don't own the entirety of IQIYI, they own around 50% of it. In Baidu Core, you'll find things like Baidu App, Baidu Maps, Baidu Cloud, Search, Ernie's large language model, and the Apollo initiative. Some of their statistics are they have a market cap of 54 billion. Their total revenue from 2025 was 130 billion, and their total cash in billions was 124.81 billion. For their revenue, Baidu Core makes up around 70% of the revenue Baidu collects. They get that through three different engines. One is a mobile ecosystem, such as Baidu App and the Ernie Bot. Another is the AI cloud, such as software and infrastructure. And third is the initiatives like the Apollo autonomous robotaxi industry. And they get 30% of their revenue from IQIYI, which is the entertainment service provider, and they get their revenue through membership subscriptions and internet advertising. Baidu Core, since they make up around 70% of the entire revenue, it's important that we talk about it. They've had around 704 million active users ever since September 2024, and they get most of their website traffic from China, and more than half the search engine market share in China is allocated to them. And then their AI cloud, their revenue in 2025 was around 1.44 billion, which is 50% more. And then they were ranked third in terms of most amount of generative AI patents in the world, having 1,234, passing Google, Adobe, and Microsoft. And then as well for the intelligent driving, they had that global robotaxi program, which had 17 million rides, and each robotaxi is worth less than 30,000 USD, and they're number one for self-driving patent portfolio and the largest autonomous ride-hailing service. For their market position, they have a few strong metrics which make them dominate the Chinese market, including their number one ranked Chinese large language model. They have a dominant search engine field as well as mobile search engine field, and just having sustainable amount of people on their website. And now for the sales by geography, 99% is for China and the rest is for the world. And then their shareholders, 20% is individual insiders, 40% institutions, and 40% general public. For my investment thesis, they're a unique business model because of their mobile ecosystem, for their AI business because of their fast-growing AI, their AI characteristics, which both of those actually help support Robin Li's claim and vision that I said at the beginning of this video. And then, of course, their Apollo initiative tops it off with a cherry. And then for their ranking and analytical opinion, they have been ranked number one in so many different departments, and they've had a high ranking in a few other departments. And then Morningstar listed them as a company with a high moat. And then their growth potential, they've been investing millions into AI and they're already showing the world impact by bringing their robotaxi initiative to Abu Dhabi, and then they don't depend on one revenue stream. They have Baidu Core and then IQIYI. For the industry analysis, Baidu's AI Cloud makes up around 20% of the revenue generated from Baidu Core. It has around 1,200 generative AI patents, as I've said before. That's a little model right there. And then they've invested around 14 billion into AI, and that's quite a bit. That's their invested capital. And then for their internet services, that makes up around 70% of the total revenue Baidu Core itself makes. And then the Apollo Go has its self-driving cars in 16 different cities, and the Apollo Go has had a 148% increase in the amount of rides from 2024 to 2025. And then for their entertainment industry, Baidu's IQIYI accounts for 20%, or basically all of the revenue generated, that separates itself from Baidu Core. So it's like a separate branch. And IQIYI has gotten the tag Chinese Netflix, such as Alibaba has the tag Chinese Amazon, Baidu has the tag Chinese Google, IQIYI has the tag Chinese Netflix. And they've had 100 million subscriptions, and they're the number one ranked Chinese entertainment platform by revenue. And now for their wide moat, they're a leading website in China. They occupy over half of the search engine market. They dominate China just like how Google dominates the West. Google dominates USA and Europe, but China is dominated by Baidu. And then Baidu obviously has strong AI, and they're backed by professionals. AI is being used everywhere. It's being used to become more efficient. And then Baidu's obviously, they've been backed by different finance platforms that analyze businesses like Morningstar and Finance Chill. And then Yahoo Finance also made an article about how Baidu is a cheap AI leader and they're leading the world. And then, of course, Robin Lee's quote that I said at the start of this video definitely backs up this. And then for their brand recognition, they're the sixth most recognizable Chinese brand in China. They're the largest search engine company domestically. And then Baidu Maps, which is kind of like Google Maps, they have had around 600 million users every day. And they're considered a tech giant, and they're compared with Alibaba and Tencent, form the BAT group. And then for Porter's Five Forces, this is just analyzing their internet services industry. They're pretty strong the industry isn't that susceptible to change with the bargaining of suppliers because of limited power of infrastructure providers, increased influence of AI chip manufacturers and government regulations. Same thing goes for threat of new entrants, as there's a lot of competition from competitors right now, and then there's a high barrier in core search, and then there's a lot of licensing requirements. But other than that, the industry is very prone to these other different things such as competition rivalry. Baidu has so many competitors, and then bargaining power, as well as threat of substitution. The balance sheet, their assets increased by 5% from 2023 to 2024, so did their invested capital, and their total debt decreased by 6%. And then what happened in 2021 was they had stronger than expected Q4 financial results, and they had a high amount of AI optimism from investors, and then they started investing in the electric vehicle market. And then but recent history has shown that they had stiff competition, which has led to a decline, as well as high AI transition costs and loss of ad revenue. The investment risks are that they mainly operate in China, and they don't have that many income sources, but Google has USA and Europe, and they have a bunch of other things as well. But Baidu is only confined to China. They also have intense competition from Google, Microsoft, Meta, Alibaba, and a few other major Chinese companies. And they depend on Baidu Core for most of their revenue. Baidu Core accounts for 70% of the total revenue they collect. And now ESG considerations. The impact on the environment. Baidu aims to go carbon neutral by 2030, which is a solid goal to have. And then the impact on their community. Baidu donated 10 million to support Hong Kong's fire rescue and rebuilding phase. And then impact, they plan to reduce the harmful content by 74% on their website. And then Baidu has conducted technology ethic audits, and the results show that the products complied with AI ethic principles. And this is just my valuation. It's my DCF model, and this is a Q&A. Thank you so much for listening. Hope you have a wonderful day.